One of the aims of the Big Innovation Centre is to be able to grow market sectors and places and really to boost and balance the UK economy. There's much more investment now in intangibles such as computerized information, copyrights, brands, trademarks, research, creativity and business process innovations than there is in buildings, machinery and raw material.
Companies are finding it difficult to raise finance in the UK, and specifically companies, startups who are showing good potential of growth, what we might call scale-up businesses. In the US for many years, where the venture capital market is often very high risk-taking and drives a lot of investment in these kind of businesses. What's become clear since I started working back in the UK is that those mechanisms really are lacking here, and that whilst Britain has a lot of great innovation and great insights and great science, too few of those companies are really getting to scale up, really getting to be growth enablers for the UK.
I really don't believe that there is an equity gap or a finance gap. There is plenty of money around. The issue is around risk and validation of business ideas, and if we can remove that risk, validate the business ideas more effectively, then finance will flow to those and value will be created.
One of the reports that I co-authored last year was Banking on IP, which looked specifically at this question of how easy it is for organisations to realise value from these assets, particularly for fundraising. And there are some green shoots, I think. There are some signs of particular types of debt finance that do start to recognise and see value in IP.
The Entrepreneurial Finance Hub is an exciting opportunity to go and open the market for debt. They've brought together a group of experts to actually bring together the necessary help that the market requires. Startups are continuing to find borrowing difficult, and there will be a gap unless banks and other lenders look at the intangible assets, a vital component to their very DNA.
So one of the things that we need to do is improve communication between the lending side of the market, the borrowing side of the market, ensure that robust valuation techniques are applied in the market, and ensure that all parties understand that if we can fill this gap, there's a larger market with benefits for everybody.
The overall stages of the Entrepreneurial Finance Hub is, first we look to identify what intangible assets a firm has. The second stage would be sort of to tie those intangible assets to the business model and find ways to sort of enhance how firms utilize those intangible assets. The third stage would be valuing the intangible assets. So having done that, then you can start to apply insurance solutions to intangible assets to lessen the risk for banks and investors who want to get involved in funding those early stage and scale up firms.
So the organisations we've spoken to have told us that the kind of companies we're looking at lack an orderly way of being able to look at their assets, to measure them, and to start to link them more clearly to their business plans. And therefore, those companies are finding it difficult to really value those assets properly in their businesses.